9 years ago, the UK voted to leave the European Union, setting off a period of political upheaval and economic uncertainty. The narrow result led to David Cameron's resignation, Theresa May's premiership, and the triggering of Article 50 in March 2017. Parliament's deadlock over the withdrawal agreement, especially the Northern Ireland border, caused repeated delays and May's eventual resignation. Boris Johnson took over, secured a revised deal, and won a decisive election in December 2019 with the promise to get Brexit done. The UK formally left the EU on January 31, 2020, entering a transition period that ended in December. The last-minute trade and cooperation agreement established tariff-free trade but introduced new non-tariff barriers, fundamentally changing UK-EU relations. Since 2021, the UK has navigated its new status outside the EU amid global disruptions like COVID-19 and the energy crisis. These overlapping events have complicated efforts to isolate Brexit's effects, but a clearer picture is now emerging. With several years of data, experts are finally able to assess the real-world impacts of Brexit on the UK's economy and society. Before the referendum, most economists warned Brexit would harm the UK economy, predicting new trade barriers would reduce growth and investment. Critics dismissed these warnings as Project Fear, while Leave advocates promised new global opportunities and less regulation. The immediate post-vote recession never materialized, but the pound fell sharply, raising import costs and fueling inflation. Uncertainty over the future UK-EU relationship dampened business investment even before Brexit was finalized. Now, with nearly 5 years of post-Brexit data, economists see a more nuanced reality. No collapse, but a persistent negative effect on growth. The challenge remains separating Brexit's impact from global shocks like the pandemic and energy crisis. Still, evidence points to a cumulative drag on the UK economy. To pinpoint Brexit's economic impact, economists use the doppelganger or synthetic control method. This approach builds a synthetic UK from a weighted mix of similar economies, mirroring the UK's pre-Brexit performance. By comparing post-2016 outcomes, researchers can estimate the cost of Brexit by measuring the gap between the real UK and its synthetic twin. Studies from the LSE and the Office for Budget Responsibility consistently show a widening gap, attributing lost growth to Brexit. The method is robust, accounting for the UK's unique characteristics and providing a credible counterfactual. While no model is perfect, the academic consensus is clear. Brexit has had a measurable negative effect on the UK's economic trajectory. The doppelganger method has become the gold standard for assessing Brexit's true cost. Analyses using the doppelganger method show UK GDP is several percentage points lower than it would have been without Brexit. The main culprit is reduced trade intensity. While tariffs were avoided, new non-tariff barriers like customs checks and regulatory divergence have made EU trade more costly. UK trade openness has declined, with exports to the EU underperforming compared to other markets and similar economies. Small and medium-sized businesses have struggled most with the new administrative burdens, leading some to scale back or abandon EU trade. Services, which make up 80% of the UK economy, have also been hit, especially finance and professional sectors, which lost automatic EU market access. Some financial activity has shifted to EU cities, contributing to the overall drag on growth. The result is a slow, steady erosion of the UK's economic potential. Beyond immediate trade effects, Brexit's long-term impact on investment and productivity is a major concern. Business investment stagnated after 2016 and remains weak compared to other G7 countries, as firms see the UK as a less attractive gateway to Europe. Lower investment today means less innovation and slower growth tomorrow. Productivity growth, already sluggish since 2008, has been further hampered by reduced trade and investment. While new trade deals with countries like Australia and joining the CPTPP have been touted, their economic benefits are minor compared to lost EU trade. Hopes that Brexit would spark a wave of innovation have yet to materialize. The long-term outlook remains one of slower growth and diminished competitiveness. Public opinion has shifted since the referendum, with a majority now viewing Brexit as the wrong decision, a trend dubbed regret. This regret is most pronounced among former Leave voters disappointed by unmet promises, though a sizable minority still values sovereignty over economics. Despite growing regret, there's no clear majority for rejoining the EU. Many are wary of reopening old divisions. The public mood is marked by fatigue and a desire to move on, focusing on issues like the cost of living and public services. Political leaders face a challenge, widespread remorse, but little appetite for another divisive debate. The conversation is shifting from Leave versus Remain to how best to manage the UK's relationship with Europe. Incremental improvements, rather than dramatic reversals, are now the focus. For both major parties, Brexit remains a political minefield. The Conservatives must defend Brexit's legacy while managing its economic downsides, torn between hardliners and pragmatists. Labour, now in government, rules out rejoining the EU or single market, aiming to reassure Leave voters and avoid past battles. Their approach is to make Brexit work by seeking technical improvements to the UK-EU relationship, like easing trade frictions and improving cooperation. Negotiations focus on practical gains, not grand treaty changes, to avoid reigniting old divisions. Both parties need broad coalitions, making any move to revisit the referendum result politically risky. The result is a cautious consensus, incremental fixes, minimal Brexit talk, and a focus on domestic issues. Political discourse is shaped as much by what's left unsaid as by what's debated. The Brexit legacy is managed quietly, with leaders wary of reopening wounds. Brexit's sensitivity endures because it became a question of identity, not just policy. For many, it was about sovereignty and control. For others, openness and European ties. Criticizing Brexit can feel like a personal attack, making rational debate difficult. The referendum's binary choice masked a spectrum of possible outcomes, leaving many dissatisfied with the result. Political leaders avoid direct debate, fearing to alienate either side or reignite culture wars. Proposals for closer EU ties risk being seen as betrayal, while further divergence alarms those worried about economic costs. The result is political deadlock. Public opinion shifts, but policy remains cautious. The UK remains in a state of unresolved debate about its place in the world. As 2025 ends, the UK is quietly adjusting to its post-Brexit reality. The drama of the referendum years has faded, replaced by pragmatic management of Brexit's consequences. Economic data shows a steady, not catastrophic, negative impact on growth and trade. The UK's trajectory has shifted, less open, growing more slowly, and struggling to realize promised benefits. Politically, regret and fatigue dominate, with leaders seeking incremental improvements rather than grand changes. The debate is now about living with Brexit, not reversing it. The long-term effects on society and the UK's global role will unfold for years to come. 9 years on, the UK remains a nation in transition, shaped by the enduring consequences of a single historic decision.